There's two other massive factors that we're about to uncover with this one as well. So just in case if you're still thinking, yeah, but what about the capital growth? It can't stay at that price forever. And what about the fact that you're going to be leveraged? There's a little bit more to unpack here.
Let's not even talk about whether it's going to grow or not, because that's a really good point. It's actually a challenge to get finance on these things. I'm not a mortgage broker, but I know that if you went to a broker or a bank with a 1-bedroom studio, 28 square meters, you're probably not going to get a loan to buy the property unless you have a very high deposit. So you're going to have a little bit more cash. It's not going to be a lot of cash. The whole thing's only $129,000, but still you're going to be leveraging more based on the value of this particular unit or the property itself, which is another risk.
And that's the other thing. If you're looking at this as like 130 grand, and if you did actually have to go all the way to like a 50-50 LVR, which from what I understand, when it's under 50 square meters, that's not out of the question for a lot of lenders, then you're talking, what is that, 60, 70 grand? That's 60, 70 grand that could actually go to something that is like a far better asset.
Far better assets, much more growth potential. You know, it's a capital allocation. You know, I talk about this quite a lot. You only have a finite amount of money, whether it's savings or equity or borrowing power. Your job is to allocate that ability to the best places possible. Now, if I have a look at these units, they actually grow. I'm not saying they don't perform in terms of capital growth, but it's so volatile.